Good morning, ShuPP here from OptionMillionaires.com. It is now November 21st. It is a Thursday, and you can see this is the S&P 500 ETF, the spiders. Look at this chart. Remains, even in spite of the recent weakness, very bullish. You can see the pullback we've had is a 60-day, 60-minute chart. Let me pull up a daily chart, and you can see we've had three consecutive red closes for the S&P 500 ETF, the spiders. And I talked about this last night in my video. A pullback to this line is very likely. Here's the 177.50 level, and then ultimately if we break through that 175, and then if we roll over beyond that, I think the 170 level, and you can see this trend line here, is going to act as support. Right now it's at about 169 and change. I think a couple more days of weakness and a rollover will get us to about 170 ultimately before we'll see one of these V-bottoms that we've seen throughout the rally that we've had since 2009 that will bring us to new all-time highs. Of course, we could just hit the support and bounce. Just something to keep an eye on. I've been talking about this now for a couple of weeks, that we're due for one of those named pullbacks. See, named pullback. We have the government shutdown. We have Syria. Remember, we were supposed to go to war with Syria only a couple months ago, and that's gone. Don't hear anything about that anymore, do you? How about Cyprus and the sequester and the debt limit? We're going to get into that again soon. No doubt about it. They've just kicked the can down the road. Maybe we'll get some more Eurozone crisis. Maybe we'll get Greece and Spain back in there. Portugal. Well, that'll be great. We'll have the pigs. Where have they gone? Where have the pigs gone? Performing so badly, they were supposed to go bankrupt and drag the whole Eurozone with it, and the euro was supposed to break apart. But here we are, just off all-time highs. The taper talk comes in, we decline 1/3%, 3 consecutive down days, and it feels like the market's crashing. Oh no! Let's look at some individual stocks. I'm in Invoost. I'm in a contest. I shorted Qualcomm, and working out nicely for me. I'm in first place and second place in another contest. You can see the pullback we have Qualcomm. I'm looking for a move to about $70. You can see why if you look from a longer term perspective on Qualcomm. You can see the $70 level has acted as resistance in the past before recently breaking out to the upside. So let's look for a test back down at the $70 level before it either heads higher, possibly comes down, and it's this long-term support line as Qualcomm. Great thing about Qualcomm is the puts and the calls are very cheap. Not a lot of volatility for the stock, so you can make a lot of money. If the stock does indeed make a move like it does, like it has in the past, from the $67 level up to 72 in a short amount of time, possibly all the way back down. Let's look at TLT. TLT is broken below significant support levels, and you can look from a long-term perspective. The chart's very bearish. TLT heading to the downside would imply higher interest rates, which would not necessarily be good for the marketplace. It'd be good for the savers who have been getting reamed, but over the last couple of years. But with the Federal Reserve coming out and they're saying they might taper in December. Come on, we've heard this story before. Come on. I think the numbers are going to weaken. Retail sales aren't going to be so good. Holiday season not going to be so good, and the Federal Reserve is going to come out and continue to print money, and might even increase their asset purchases. Something that the market wasn't expecting in September. They thought everyone thought the Federal Reserve was going to taper. Now they're saying December. Come on, it's not going to happen. Can't happen. Let's move to some individual stocks that are reporting earnings after the bell today. That'll be Thursday, October 21st. Autodesk played this nicely on this head and shoulders pattern. Post earnings, look at that. Beautiful downside. Held support at the neckline. Head up. Another head and shoulders. Broke to the downside. And here we are again. Possibly forming another head and shoulders pattern. This would be a left shoulder. That'd be a head. We have to get down into shoulder level. So to me, if I was trading Autodesk, I'd look for downside at this $40 level. If you look at the options, though, Autodesk has been historically volatile after earnings, so you're looking at about a 6% move, either up or down. You can look at the options. You have to go out to December because there's only monthlies. The $40 or $1. So if we need to move to 40, those will probably be about 75 to 100% gain. However, if it moves to the upside to new all 52-week highs, so you're at the $45 level, those options will probably drop 50%. If the stock stays flat, probably drop about 40%. Something to keep in mind, we have Gap stores moving higher. Look at this, folks. Putting in a lower high recently, broke above resistance. You look at a 5-year chart. Gap store putting in a double top here, just about a little bit higher than it was back in 98 and 99. You can see consolidated back up To me, a possible move to the upside. I'm not going to trade it. It's going to be a very risky trade. Not sure where it's headed. We see Macy's up, JCPenney up, some of the retailers that rely mostly on clothing. So I'm not sure where it's headed here. I'm not going to trade it, but I figured I'd bring up the chart. The stock is possibly putting in a double top. It's got some gaps to fill short term over the 20-day. So it'll be interesting to see where it heads. Post earnings, we have TFM, which is the fresh market you can rely on. Maybe Whole Foods' latest earnings report. Whole Foods just off all-time highs. Fresh market's way off all-time highs, which was at about the $65 level back this time last year. And you can see what happened last year. Earnings report, boom, plummeted. So to me, if you're going to trade TFM, we could see a similar type move to the downside, just historically based on what it's done in the past at this exact time. That was a significant move to the downside, 60 down to 50, about a 15% move, which would imply a move down to about 42.50. 42.50, you look at TFM, again, not a very liquid stock as far as options are concerned. You got to go out to December. We get down into 40s, 25 by 40. It's going to be a little risque. Maybe the $45 puts will work. Good part is, if it does not make that move, the $45 put's going to be about 150% move. But again, the risk probably not worth the amount of money that you need to put in and the reward down the road. If it does make that move, the market is expecting, let me just see, about a $6 move. So that's, just about a 10% move. Let's go into Intuit, which is at all-time highs. Look at this stock rally. We have a couple candles to the downside recently, but overall, the stock is doing quite well, and something I wouldn't want to short, but I'm also not confident buying the calls in it either. So something I'd stay away and wish everyone good luck. How about Marvell Technology Group? The stock has rebounded nicely off its lows. You can look, the stock tried to break above long-term resistance and got a little bit above it. And we can go to the long-term chart here. There we go, and you can see this pattern working out nicely. Is it going to break higher, or is it going to pull back down to the 750 level? It's going to be an important earnings report from Marvell. Not sure where it's headed. Again, undecided. This is a very interesting juncture. You could trade, of course, a straddle or strangle. This is a great thing about trading stock options. You can play it both ways. You can buy some calls and buy some puts, out of the money calls, out of the money puts, or right at the money and see what happens. But it's something I'll stay away from. But just interesting to see where it will head, though, post earnings, because you can see the charts all set up, and the earnings report is what's going to send it out of this wedge to the upside and possibly up to about $25 or back down to $7.50. So this is a very important earnings report for Marvell. Pandora, we have ambiguous signals from the analysts. Some of them are upgrading the stock, $39 price target. Others are downgrading it. And you can see it's sitting right in the middle of this channel. So it's very interesting right now. It's going to be the same thing as Marvell, where I think we're going to either launch up to new all-time highs for Pandora, or it's going to crash back to the bottom of this channel at $22. And again, it's not going to be something that I'm going to want to trade. Finally, we have Raw Stars, which has been on a crazy run. And you can see how this green circle here is highlighting a cup and handle formation. See this cup and handle continuation pattern. We love those. Cup, handle, continuation patterns work so well in this market. When you have an uptrend, of course, any kind of pullback in this market has been a buying opportunity. You see it with Raw Stars, which is up, gosh, 600-700% from its lows in 2009. Is it going to continue to spike higher? That's the thing about this market. It's tough, and people have a difficult time wrapping their minds around buying a stock at all-time highs. And, so that is what makes it difficult here heading into earnings. The options are pretty cheap. So if you do think a pullback's coming, it's at $81. I think the $80 puts are at $1. And so if you get a 3 or 4% pullback, it'll be a nice trade for downside. One interesting thing to note, even with the taper talk, we have the VIX, the volatility index. The VXX tracks the short-term futures. The VIX, I believe, was flat. VXX was down 2%. New all-time lows, by the way. And you can see the chart. This is an all-time chart for the VXX. it did not bounce, even in spite of the weakness we saw with the S&P 500. Initially, maybe we got a little bit of a spike after the minutes were released at 2 p.m. Eastern Standard Time, but then we kind of pulled back. So it's going to be interesting here with the VIX. Nobody seems to want to hedge any of their long positions with the VIX or VXX. Something to keep in mind, when people are fleeing away from a certain asset, at some point it becomes a great buying opportunity, at least for a bounce, and I think maybe the VXX is ripe for a short-term reversal. And I'll be looking at some calls in the short term, especially if we get that pullback that I think has a good possibility of happening, and that pullback is with the S&P 500 down at 177.50 and then ultimately down to the $175 level, possibly down to 170, this trend line, before V-bottoming and heading to new all-time highs. All right, 2PB here. Thanks for listening. I'll see you in the chat room at optionmillionaires.com. JB in the watch list yesterday brought up Dust, brought up the $39 calls. At 40 cents, they closed up 504%. Also talk about GLD. Look at GLD. GLD's in no man's land. This is one of the hottest asset classes, and you can see it's broke to really looks very weak here. Significant downside possible with GLD. It was brought up at the Option Millionaires watch list yesterday morning. These options for the GLD 120 puts that were brought up were up 370%. So Dust and Gold doing really well for Option Millionaire. OptionMillionaires.com and JB over there calling it out. All right, 2BB from OptionMillionaires.com. Everyone, I'll see you in the chat room. If not, have a great trading day. Goodbye.